Today's video is all about ALEPH.IM. Keep your dApp running smoothly thanks to reliable Web3 cloud solutions. Today we're going to be doing a deep dive looking into the team, the tokenomics, the overall value proposition, and more importantly, whether this project has what it takes to make it to our portfolio for the up-and-coming bull run. So you know what? Let's talk about the news, let's analyze the charts, and let's strategize to capitalize. Welcome to the channel. My name is Mike, and let's get right into it, guys. If you're new to the channel, welcome. On the channel, we talk about cryptocurrency, Bitcoin, Ethereum, and all the altcoins, looking for opportunities. And the question is ALEPH.IM an opportunity? All right, guys, let's look at this project. We're going to definitely do a deep dive. We're going to look into some of the details behind it, like the team, the value proposition, the overall utility, the tokenomics, and ultimately, we got to make some critical decisions. Are we going to be building a position for the up-and-coming bull run, or are we going to pass? All right, guys, we're going to look at the project through the lens of this website, and we're going to use the website as our main platform to navigate. Now, of course, we got to depend on the website to give us every piece of information we need to get fundamentally bullish. So it gives us an opportunity to critique the website in itself. All right, let's begin. Keep your dApp running smooth. Great stuff there. Access trusted off-chain data computation within a couple lines of code. Blockchain agnostic. That's a very, very important concept here for the ALEPH.IM project, given that it's not directly related to a particular blockchain itself. It's basically accessible amongst many, many blockchains. As you can see, based on the image, we have Ethereum, Polkadot, Cosmos, Polygon. It's interoperable. It's basically cross-chain. BNB, Solana, AVAX, and blockchain agnostic is the overall concept here. It doesn't matter. Their objective is to be basically deployed on all the blockchains, so you can access their services regardless. So cool stuff. Lightning fast, low cost, trustless. Cool. We have the Liberty.io harness ALEPH.IM's power for decentralized AI. So we got some AI solutions happening here. A very hot narrative, of course. Now, fully decentralized peer-to-peer AI, the synergy allows for efficient computations while ensuring data privacy and system reliance. Okay, so that's the AI concept of things. Yeah, at the end of the day, what I'm getting from this project, it's ultimately DeepIn, right? It provides AI computational power, it provides decentralized storage, and I think that's the main idea here. Why use ALEPH? Build dApps without any centralized components. Guys, that is a very, very hot topic. And more so, it directly aligns with what I've been saying significantly. If you've been following me here on the channel for a while, I think the decentralization, particularly of our web space, is super, super important. Because at the end of the day, we're seeing that the choke points with regards to DeFi, for example, is the website itself, right? The website itself is the choke point in the sense that that's where things get a little bit hectic. Imagine if we can decentralize all Web3, including the DeFi applications, and that way, ultimately, you have a decentralized scenario where DeFi, including the DEX, is not, prone to any type of scrutiny with regards to regulation. And that, for me, is a very, very important. What we want is a complete decentralized Web3 solution, and I think ALEPH does offer that opportunity. So building dApps without any centralized components, run your data storage, business logic, and and our unstoppable decentralized network instead of centralized services like the AWS or Google. Guys, I've been saying this for a long time, so I'm very glad that this project is actually maybe adhering to what I've been saying, what I've been wishing that there was a solution for. Obviously we look for problems, and then once we identify a problem, we start to look for solutions. And ALEPH does look like, at this current moment, that is trying to offer a solution to an important problem, decentralizing our web space. Private virtual machines, 24/7 virtual machine functions, Lambda, basically serverless computing, storage solutions, of course, immutable volumes, file storage. Okay, all good. Now, the file storage solution, we know that there are a lot of competitors in that space. Filecoin, Arweave, and others, right? So this is something that we got to keep in mind, is that, it's trying to compete with projects that have large market caps and have, a well-established name and team and so on and so forth. So we're going to keep that there, but so far pretty good. Indexing framework, consider using the Aleph index framework for indexing blockchain data. Guys, scraping data is very, very important. That's how we can make our applications smarter, particularly using AI. Easy to use solution for building high performance decentralized indexers. Pretty good. Okay, that's a utility. That's something that they offer as a service. Their roadmap, not bad. At least they're giving us dates. They're giving us milestones. They're giving us clarity. Now, can we rely on it? Usually the website is not the main interface to keep things absolutely up to date. But because they get into 2025, yeah, it's pretty good. The fact that they got all this information is nice all the way up until 2025. So database sharing, storage resources, resource nodes, file sharing features, block storage. Okay, a lot of things happening here. Obviously, it's a matter of keeping up with the team, keeping up with the literature that they release with regards to their progress and so on. You can see that they do have a lot of progress happening within some of the milestones that they want to achieve, which is good. Backed by, okay, something that is a little bit interesting here, because we do see a lot of VCs, lots of capital, venture capital coming in. And this is something that's a bit concerning, given the fact that we know that venture capitalists in the last little while, this has been a hot topic amongst crypto, that, venture capitalists, projects that are highly funded by VCs, tend to be very unstable and unpredictable as far as their price, because ultimately, VCs, their main objective is to basically be profitable. They provide capital. They want return on their capital. They don't really care about the tech. They really don't care about the sustainability of the project and so on and so forth. We got to be real. What is the primary objective of a venture capitalist? To get a high return on their investment. So we got to be clear about that. Aleph does have a lot of capital available to get things going because of all the venture capitalists, which is great. But when these individuals want to take profit, it's going to start to look a little bit scary, because they're going to want to get their initial investment back. So just keep that in mind. Now, I see a great partnership with Ubisoft, which is good, and they're actually partnering up much more than you expect, which is good, because ultimately they have some applications being built and they have some utility being built on their decentralized aspect of things, so which is really good. Okay, so Ubisoft is definitely involved. I would say that they're a very, very strong partnership there for the Aleph team. Again, venture capitalists is a good thing and also could be a bad thing, and it has all to do with the availability of capital, and we'll talk about that in a second. Okay, we'll go through that in a little bit more detail. Now, as you can see, that's the finale of the website. Personally speaking, the website is underdeveloped. There's not much happening here. We need a lot more information. And as you keep on moving around here on the website, usually the footer has a lot more other. This developer documentation has nothing really to do with us as the retail investor. Okay, this is something that I'm going to kind of be very clear on, is that these websites need to be designed and they need to provide information that is directly useful for the retail investor. If the team wants to have mass adoption, they need to have the retail investor in mind. And at this point, I can confidently say that the website does not consider the retail investor, unfortunately. And to go one step further than that, there's no real white paper that also takes into consideration the retail investor. There is a white paper. It is extremely outdated, and it is a very outdated document, which we'll take a look at very quickly, to the point that I don't want to give it too much importance because I can't rely on it. But it's been addressed by the team. The team is aware that their white paper needs work and that they need a better documentation, right? So at least they're aware of it, and at least they're not hiding behind it. And I give them credit for that, because that means they know where they need to improve. And of course, once they go through these improvements, you're going to see that the project itself, from a retail investment perspective, should do a lot better, because it's going to be very hard for a retail investor to want to get in on a project where we can't get the information. So I'm going to set that as a tone here. As I was doing research on the project, it was very, very difficult. Okay, very, very difficult to do. I wasn't able to get my hands on a lot of the information that I needed to understand how the project was, what the project or the schematic of the project with regards to tokenomics or even the team itself. Like I wished I had a little bit more, but mostly it was about tokenomics and what is usually listed on a white paper. Okay, so we have the SDK, we have the Explorer, core nodes, computational, but this is all developer stuff, not really interesting to the retail investor. About media kit, and then what is the 26 cloud, which we'll talk about in a second, and then the bridge, and that's about it. Telegram was not, I went on there for a bit, and it's not very active, but I can say the founder is there. The founder is there. If it wasn't for the founder, I wouldn't, and some of the team members and some of the individuals there, some of the community, let's put it that way, I wouldn't be able to do this deep dive. And that's a bit of an issue. And I was very clear about that. If it wasn't for the founder being there, giving me everything I needed, not verbally, but within the messaging, I wouldn't be able to be really confident with this project. So there's a lack of information, right? We shouldn't have to wait around for the founders of a team to give you everything you need. It should be here on the website. So I'm going to just say that, there is an opportunity to get the information you need, but it's like a little bit hard. You shouldn't have to dig this hard. It took me 3 hours just to figure out the circulating supply and the max supply. And that's a problem, right? Now, in a way, that's not really a problem directly related to ALEPH.IM, although it is, because they should address the fact that CoinGecko and CoinMarketCap, their numbers are not reliable. I don't know what's going on here, why they're listed so they're not accurate. So that's that. You can't rely on these numbers, and same with CoinMarketCap. So with that being said, the team should know that they need to put something on their website to address it. They need to provide the core tokenomics right onto the website. And a lot of websites do, a lot of projects that are in crypto, they do offer that. So that's one thing that I'm going to be clear on. You can't rely on CoinMarketCap and CoinGecko very often. So that in that case, we need the website to offer that information. Other than that, their LinkedIn, they are doxed. The founders are doxed, which is good. And there's some articles on Medium that can kind of, help us with some of the deep dive. But again, I don't think that that's a place that the team should rely on. All the information should be official and it should be posted on the website. All right, let's move on from that concept. Let's see what else I have here for you. This is the white paper that I was talking about. It was written in 2019. Guys, very, very old. I don't feel confident and really using this as the basis of my information. Yes, there's some good stuff still here, but can we rely on it completely? I'm not too confident about that, given the fact that the tokenomics did change significantly in the last little while. Okay, so and we need to address that, and the data storage and all of that. That's great. That's very typical type of project where your decentralized storage system's fine. But ultimately, you can see that really there's a lot of information with regards to tokenomics that I wish it had. The token itself, this is it, token use. Even this seems to be very vague, especially with what it actually has on the website. We got AI, we got so many other things that I'm going to show you guys in a second that doesn't get addressed here because it's outdated. Unfortunate, very, very unfortunate. Okay, so I'm going to kind of leave this alone and not touch upon it because I don't want to get anybody confused here. But there are some blog posts that kind of help you out. Now, this one is from 2022, also dated, but what can we do? We're going to do the best that we can. This was released it was published by the ALEPH team, which is fine. The timeline, I want to show you the tokenomics. They updated their tokenomics so that we can be real. They redistributed, or this is the pools. They redistributed the pools in such a way where now there's only 500 million tokens in circulation. So they redistributed the size of the different pools. Like before, you can see now there's 200 million for incentives, so there's a lot more, which is good. The business development, you can see they went from 120 to 100, and the company now holds less, 150 to 100, and so on and so forth. Okay, so this is a good thing in the sense that they were able to redistribute, and these are the new pools. And what I really like the best about all of this is that they do have the wallet addresses. Okay, so you can see where these pools, all this liquidity is being held, and so on. The only thing that I do not like about these pools is that the majority of them are in the hands of the team, right? They're not decentralized or governed by a DAO or anything like that, which means that we have to kind of rely that, the team itself is going to be allocating the capital in a correct way. And there is no vesting schedule that can be found. And it's very vague, again, very, very vague. It's not very systematic. And it was very clear that, with my conversation with the founders, that a lot of this is kind of like, in the works. It's just kind of like they're taking it day by day, which is not something that the retail investor should have to deal with, in the sense that we're relying on a faith-based system. And that was the words exactly used on Telegram, is that you're going to have to trust the team. And that's a bit of an issue, guys. I don't trust anybody, and in Web3, we should not be trusting anybody. We want to see that the contracts are in control, not individual people. So you can see that all of a sudden we got pools. We have the incentive pool, 200 million. And again, this is from 2022, so there's some, disparity, like they're not accurate, right? So what's left? 118 million. Originally 100 million left. Okay, you see what I mean? So a little bit of back and forth from previous to current. Business development pool, originally this, but now it's 100 million, and this is the address. And there's a bit of ambiguity, because it's like original unlock schedule, but where is the unlock schedule? I want to see the schedule. I want to see how the token is going to be diluted over time. I want to see the emissions rate. I want to see everything. I want to see what's going to be happening as the tokens get unlocked, and into which wallet, and how that money is going to be used to improve the overall project. And I think that's what the retail investor wants. Okay, so this is good. This is even better. Let me just scroll up a second, because there's a bit of an explanation how they reallocated the capital into the various pools. You can see 50 million for innovation, 60 for marketing, and so on. This is the reevaluated innovation pool, and so on. And again, with the wallet addresses, but you can see they do kind of insinuate that there is a vesting period. The innovation pool will be unlocked over 4.5-year period, ending in 2026. Yeah, okay, that's fine, but we need a little bit more. We need to know the frequencies at every month. We want to see a graph. We want to see a little bit more here. And of course, this is usually stuff that is listed on a white paper or a Git book. Ideally, I like the Git books better than PDFs, to be honest, because they could be updated and worked on over time, and so on. So again, the team does address that it needs to have that, but I would suggest that they put this in priority. Now, I'm going to give you a bit of a rant here, because it kind of bothers me. It bothers me that, really, that a lot of companies, a lot of projects at this point had the entire bear market to prepare for the main event. You're training for 2 years for the main event, right? You're getting ready for the fight, you're training, and all of a sudden the fight comes, and you're not ready. You walk on the stage, or you walk in the ring with a beer belly. This is a bit of an issue, right? You had a lot of time to get your white papers together. You had a lot of time to get this all organized, to get the retail investor comfortable to start deploying capital here. And we shouldn't have to go on Medium websites and Medium blog posts to get, information that is not even that clear. So I'm going to be very honest here, and I have to be honest. It needs a lot more clarity for me to be comfortable here with regards to tokenomics. And the fact that, we have to rely on the team to make critical decisions with the capital that is put into some of these, the company pool. That's a lot. The old amount is 275 million. The new amount is 150 million. And if 50% of the tokens are in circulation, and according to the founder, there's a lot more tokens in circulation that are within the wallets of the team, and ultimately that doesn't mean much, because really that means they're in charge of all those tokens. So it's a bit more ambiguity. There's a lot of ambiguity. I am very, very I felt uncomfortable with what's happening with the tokens. Okay, so let's put it that way. That's one of the issues that we gotta, resolve. All right, so let's move on from that. That's tokenomics, and you'll see that this project is very hard to cover. Now we're gonna see the team. Let's take a look at the team. Fully Docs, Jonathan Schimmel. very qualified individual, very qualified. Okay, so he's obviously one of the founders. He is the founder. He's a consultant, obviously has some blockchain experience, founder of Paris, maintainer of lead development. He's got a lot of experience in the blockchain, in the tech space, which is good. Okay, and the other one is Claudio, also well established within the blockchain community, lots of experience, senior designer, front end designer. So pretty good. Senior, again, another a designer for a blockchain, or even a tech company, some sort of software company, which is good. All good stuff, and they got lots of experience. If you keep on clicking, you can see their experience as far as it goes. A lot of things happening here. Checkout processes, basically a lot of tech background, which is good. However, what I feel ultimately, and again, they could have somebody, but they need a business manager. They need somebody that knows how to, put a business together. Because as of now, like, I feel like the overall packaging of the product, because it's a non-tangible product. We know that ALEPH.IM, at the end of the day, is a software solution. And as a software solution, there's no tangible product, so that we as customers can touch and hold and feel, and we can say, this is good quality. So what they have to rely on is their description and their packaging. And the description is not even present, right? We don't have a white paper. And their packaging, their website is lacking information. And overall, the perception, which is part of the packaging for me, as the cover of the book, essentially doesn't even give me an interest to want to dig deeper, because once you start digging a little bit, you find nothing, right? There's no information, right? So they need something here. They need somebody to kind of repackage this product so that the retail investor is interested and can get mass adoption coming. So a business manager with some qualifications to get this thing off, get this thing in better light would be absolutely great. The website is a nice design, but it's missing a lot of information. It's not going to sell this way. Now, if we keep on going, what's important is one of the aspects is that, this statement right here, blockchain agnostic, but even more so, they have a solution, a software solution that is, catered towards individuals that may not be so comfortable with blockchain, but still want to get involved in the decentralized aspect of their product services, which is this right here, the 26.cloud all-in-one Web3's cloud. Basically, you can deploy dApps, you can deploy websites, and gain access to all the product offerings without the exposure to blockchain. It would feel like you're not even in a blockchain experience, which for me, this is important with regards to mass adoption. The regular investor or the regular user doesn't want to know about blockchain. They just want it to work. And if you can package it in such a way where basically you get access to the features of a decentralized Web3 solution, but not feel like you're using one, that for me is actually a great value proposition. So I kind of like this. You see a lot of repetition with regards to supported blockchains, which is good. Remember, blockchain agnostic. So basically it doesn't matter. They want to be available on all the blockchains. Talking about Polkadot's, Substrate, a lot of the virtual machine, the EVM compatibility, so you can get on all Solidity based projects, which is good, and all this kind of stuff is really awesome. So I kind of like this. This is pretty good. We want to see this go one step further as far as adoption goes, because I think this is going to provide a lot of solutions to problems that we're having currently in the Web3 space. So kudos to them for providing this, because I think this is going to improve the mass adoption side of things. All right, let's move on now. The scanner itself, guys, because it's deployed on multiple chains, you can see right here chains, and if we go more, it's BNB, Polygon, Solana, AVAX, Cosmos, and Polkadot, right? This is great, but ultimately we want a scanner that's going to show us all of the tokens across chains. And I believe that this is what this is for, right? Now, if this is what it is, this is underdeveloped. Like, I want to see the major token holders. I want to see the wallet sizes. I want to see that happening. I think that's the most important thing on all scanners, is to show, you know, where's the token distribution? Where's the big wallets at, right? And there's no way to really get that information, because here you have the most active. It's not necessarily that I want the activity. I want the size, how many tokens they're holding. Now, I know that that could be deceiving because you can have multiple wallets and all of that, but it does help kind of see which which wallets are big holders and so on and so forth. So that's that. Ultimately, so the team is doxed, the founders are doxed, and we looked at some of the tokenomics. We see the tokenomics, and the distribution is not there. There's nothing really else to be said here, guys. Ultimately, it's a very vague project, and I would like to know a little bit more, and you know, to get excited about all of this. But I am excited. It's just I feel like I'm not dealing with a blockchain solution, given that there's not much in the background to give me some of that info. All right, guys, let's move on. You guys know that I do release a infographic for you guys every time I do a deep dive. So let's take a look. All right, so ALEPH.IM. Overall, my overall verdict. Okay, we'll get to that in a second. So some of the things that I want to address is the ecosystem. The ecosystem is there. They got a lot happening. Okay, so the decentralized AI, Liberty, basically, you can stake some of your tokens, your ALEPH tokens, and you can earn for the official token LTAI, which is part of the utility down here, as you can see. So they have this aspect of things coming out, which is the AI aspect, coming out soon. We're going to get a little bit more information about that in upcoming days, I guess. Indexing framework, that's also available. Private virtual machine, good stuff there. File storage, which I believe is their bread and butter at the current moment. The 26 cloud marketplace, like we said, you get on that marketplace, you can, you know, basically obtain a decentralized server space or storage, cloud storage, which is great. And you can put your own storage that you have available for sale so other people can use it. And you can earn passively based on that, providing that value. Utility, to pay for storage, right? Blockchain, node rewards, but I feel like I didn't get enough here. I got this off the old white paper. I still feel like there's a lot of ambiguity. Like, again, I'm premising all of this based on the fact that I was given outdated information, and even the little information that I was able to get, it feels like there's a bit of a disconnect. Okay, and that's a bit of an issue for me, because I'm not very confident. But this is what we got. We got to take it as it is. The roadmap is there. It's clear. 10 out of 10. Do we trust the roadmap? We have no choice in a way to trust the roadmap, because that's all we got. And it does look good. At least they introduced 2025. I'm just wondering if they ended up pivoting at any time. With any of those objectives, right? Because again, it's a website that maybe hasn't been updated for a bit. The team, I'm gonna have to be tough on the team, right? Although the founders are doxed, and I would, if it was just the teams itself focusing on tech, the tech team is great, 10 out of 10. However, there is an issue there, because I can tell that the team is focused only on the tech, not the business, not the aspect that will sell this project. And that's the problem. So the team needs a project manager. They need a business manager, somebody that's going to go there and repackage this whole thing so that it can be sold properly to the retail investor. Personally speaking, as a retail investor myself, I find it very hard to get fully invested in it. You know, even liking it, the tech itself, I'm reserved. I'm holding myself back, which is unfortunate, because you guys know that I'm really into the Web3 decentralization, particularly what they're offering, which is the decentralization of websites. So for me, that is perfect, but I can't feel comfortable about it because it's lacking a lot of that information. The socials, not bad, given the fact that we've seen a bit of a, you know, a bit of a sideways spell in the last little while with regards to market. So we can see that they have a bit of followers, 42,000 followers. They got 698 followers for the last 30 days, up 256%, which is healthy, really good. Their X posts for the last 30 days are down, in fact, which means that they're not posting as much, but not drastically. A couple more posts they would basically basically be on par with their last month. So they're doing okay with regards to socials. But what's even more important was what I liked was that the founder came on the Telegram and was actively involved and actively helped me try to make sense of the project, right? And a lot of what he said made tons and tons of sense. But like I told him, like, it's a bit of a problem when it takes me 3 hours just to find tokenomics, and I rely on him to give me everything I need in order to get the information. That is a bit difficult. That's not a good thing, right? It's very centralized. Let's put it that way. The information is centralized. Tokenomics, guys, there's a lack of clarity, tons of ambiguity there. Founder claims that there are more tokens in circulation than reported on CoinGecko and CoinMarketCap, and that they are in the control of the team wallet, which all of a sudden red flags start coming out to me. Like, what does that even mean? And that the team hasn't really been taking any tokens for themselves, and they're gonna make the decisions as to when they deploy, when they use them, and that we're gonna have to trust them. I honestly, when it comes to that bothers me. There's no faith-based systems for me. I don't want to have faith in anybody. I want to see clarity. What is it? And who's making the decisions? And hopefully it's a very decentralized decision-making scenario. Now, we do have to understand that there are tons of VCs involved in this, so tons of venture capital. And because of that, I have a feeling the tokenomics are going to, there's a bit of ambiguity because of that. Venture capitalists are going to now be, I'm assuming that they're holding a lot of tokens, guys. Okay, so again, that's for me, because there's so much, vague aspects there. I have to, always, just be neutral and say, look, the VCs are involved, and if there's no clarity on the tokenomics, red flag. Be careful, guys. It could end up being a scenario where you get burnt, because we don't know how many tokens the VCs hold or anything like that, or it's just a very vague scenario. Okay, so just keep that in mind. I love the partnership with Ubisoft. That's a great one. I think that they're directly involved and they got actual utility, and Ubisoft is using it, which is good stuff. So I give it 9 out of 10, because at the end of the day, venture capitals are great. They're great at what they do, which is provide liquidity, provide capital. Now, that could be a negative thing, like I mentioned, right? Because they take profit, and they take profit hard. So what I'm going to say here is, any signs of a bear market, take profit and understand, because venture capitalists are also going to take profit. But more importantly, venture capitalists allow projects, even small projects that may not even be fit to be listed on certain big exchanges. It doesn't matter. They get listed. Why? Because VCs are backing them, and VCs give them the capital to get listed. So Coinbase, Gate, Uniswap, KuCoin, Trader Joe. Okay, that's a DEX, so that doesn't really count. XT.com, Mexi, CoinX, and some other stuff, some other ones that, are small and so on. But really, what's interesting, how do you get listed on Coinbase? How do you get listed on Gate and on KuCoin and Mexi? They want fees. They charge to get listed. Now, of course, with a VC that has, some deep pockets, they'll help you get listed, because VCs know is that listing brings in volume. Listing brings in trading volume and brings in distribution, right? You can get retail investors can get access to the tokens based on these big exchanges, and they bring in a lot of hype. Again, is this a good thing or is this not a good thing? Guys, you're gonna have to make that decisions. Personally speaking, I would have loved to see a lot more clarity into what the project is about with regards to tokenomics, and then I would be a lot more interested. But still, there's a lot to be said here. This is either a really good thing or a thing to be extra skeptical about. Let's look at a bit about the coin info. Basically, we're doing pretty good. It's at about 30 cents today, fluctuating here and there. Market cap 73 million. Trading volume is quite low. Even though they're on Coinbase, they're only getting trading volume of 1.5 million. That's 2% of the market cap. That's very, very low considering they're on all those exchanges. That should tell you something, okay? Supply 247 million, almost 50% of them in circulation. Max 500 million, fully diluted is 149 million dollars, which is still very, very small. A lot of good opportunity here. Again, if they were to fix all of these scenarios, this, in my opinion, would be an undervalued opportunity. Right? But given that there's so much ambiguity, I feel like it's a bit risky. And that, based on risk to reward, it's tough. It's tough for me to make some critical decisions here. So again, I'm going to premise with an asterisk here. White paper and documentation is outdated and can't be relied upon to gather information about the project. And even still, it's very, very iffy. Decentralized storage, AI, DPIN, I would say very good narrative, hot narrative, should be a really good narrative for the up and coming bull run. Founder is aware and agrees that the white paper needs an update. They desperately need one, and I would suggest using a Git book so they can keep it active and up to date. I had to rely on Medium blog posts, guys. That's a big issue for me. I do these all the time. You know, I release a deep dive video every week, and as I'm doing research for about 24 to 48 hours, if I have to rely on a blog platform to give me the information that I need, that for me is a problem. Where is the business management? Right, there has to be something there. There's got to be somebody there with communications skills to get this thing going and repackage it. Okay, so the website needs a deep dive. All the deep dive information needs to be readily available, especially on the website. There's no reason why they can't have it on the website and a live Git book, which would be epic. There are gaps in the information, obviously, on the token utility, because the white paper and the overall product offerings are disjointed. So I don't know what's the utility of the token in today's realm, given that they have so many additional services available. I need to know a little bit more about the utility of the token, right? There's staking. I know there's staking, but I need a little bit more. I need to know exactly how that works. And there's no information there. Founder is active on the Telegram and his docs, great stuff there. Kudos to him. I think that's a very strong statement to be said, because that's very rare. So I'm going to counterbalance a lot of what I'm saying here by the fact that he, at least he's showing face and he's doing what he's got to do to, make things right. However, again, he's got to put somebody to get this all fixed up. There are tokens that are in control of the team that should be governed by a DAO. That's something else that was addressed by the founder, that in the future there could and should be a DAO to get this completely decentralized. If it was not for the founder and other members of the community, the deep dive would be impossible. So that's a problem in itself. We shouldn't rely on the founder to come on our at our convenience to give us everything we need. It should be already there, plainly, with nice graphics and black and white writing. Nice and easy, and that's about it, guys. So if we look at my overall target, I'm going to be very, on the fence about this. I'm just going to say that, look, if everything goes well, this is a very positive outlook. If everything goes well, I say, why not see it at about $8? It could do a nice 20x, not a big deal. An up and coming bull run with lots of liquidity coming into the overall crypto space, we should do very, very well. However, given the amount of ambiguity, I have no choice but to give it 6 out of 10, because what you don't know brings risk, right? And if it's not easy to understand, that means you still don't know, and you could plead ignorance, but it's still ambiguous, and that is risky. So in my opinion, knowledge is what's going to give you a better risk to reward ratio. And at this state, I have no choice but to say 6 out of 10 for ALEPH.IM. I would love to give it higher, but hopefully in the future they can make some updates to make us feel a little bit comfortable here. All right, guys, I know you're here to talk about charts as well, so let's do that. Let's see what's going on with the ALEPH price in the last little while. Has been doing okay. It did get a nice run up to the upside, and it did get a bit of a rejection on the double top. You can see a nice double top there. Easy to identify. What I do worry is that we're coming down to hunt liquidity, right? And if that's the case, we have a few levels that we got to worry about. Now, I don't want to worry too much, because we do have a huge amount of volume being picked up into this level. Right, a lot of them. We got a spike of volume right into here as well. Look here, I'm not even sure what happened here, but what happened? You could see a nice spike of volume right into here. Okay, so huge run up, really nice volume, nice a lot of market participation. I'm hoping that if we do come down, this is the level of which we gain support. A nice higher low at 24 cents. Confluent with the 200 daily EMA, which is really nice. We get that bounce, we continue to the upside. But in the meantime, we have to be aware that it could be that we come down for that lower low until we get confirmed higher low. Let's get down to this level. Let's see what the momentum does, because currently the momentum doesn't look the greatest. We're beginning another fresh expansion to the downside, which is not a good look, and the momentum is pushing down. Now, in the meantime, we can get some positive volatility to the upside, which is great, like we've done in the past. But ultimately, on the way down is where we get a lower low. If we continue making those lower lows and lower highs, guys, it's likely that we see the momentum try to get down to the 30% mark again, and maybe get oversold. It could be possible. So we got overbought, we're rolling over, maybe we come down to get oversold. And then if that's the case, then that's the level that you should be considering maybe reaccumulating a position. So at this current state, from these two tops, pretty much, we were getting a bit of divergence right into here. We got the follow through, we came up, made the double top or lower high, and then now we're coming back down. So in my opinion, obviously guys, not financial advice, I would be waiting for this to confirm a bit of a bottom. I would wait for, don't try to catch the falling knife. I would say I would be a lot more interested right around here, about 25 cents more or less. And I would put a notification right around here to address the price action when it does get there, so we can see exactly what the indicators are showing us and what the price action is showing us. So let's put a notification right there. And if we do make some support and respect the 200 daily and this horizontal line, guys, I'm all in. I'm happy with that. I'm happy to get in with a bit of a bag. But in this scenario, it does look great if we do get support, because also what we can address is the fact that it's making some sort of inverse head and shoulder, right? Very nice. If we do come down, and this is the neckline, which is at about 45 cents, 44 cents. And if that's the case, guys, we start breaking really this accumulation right into here, right at support levels, could be a great expansion to the upside for a continuation. And you can see we can get into price discovery real easy, and the measured move target, easy, $1. Easy. I don't see a reason why not. With one swoop of a breakout, we can get to about $1, you know, and then we can come down, because that's a nice psychological level real quick, right? So not bad, but until the momentum continues pushing down, which is the purple line on my momentum oscillator, guys, I'm not willing to take risk. It's continuing to push down, and I'm wondering what this volume gap does, right? So let me kind of get this volume gap out again. And let's put a horizontal line into the volume gap. Let's see how much we can. Right into here, you can see there's a volume gap right into here. Weak spots. Let's try to be accurate as possible. Right into there. I like this level, that bottom. Look how nice and confluent it is. And you can see the confluence is based on the volume profile, right? We put in a red box to identify weak spot. Let's put a red box right into here. Beautiful. And then we know that ultimately, if we do not hold the 24-cent mark, we can fly all the way down to about 14 cents, which is a huge dip, guys. A huge opportunity for that matter. And if we come down for a lower low, the next level is all the way down here. Unfortunately, we have to call that as it is. So take it day by day. Let's see where the momentum goes. If it gets oversold, it's likely that we're coming down to about 14 cents and maybe even a little lower. But we have to, again, take it day by day. But in the meantime, I'm wondering what type of reaction we get at about 24 cents. And that could be the opportunity that we're looking for buying the dip. And if you look at the trend is still pushing down, guys. There's nothing bullish about this. EMA is facing down, red histogram bars to the downside, and the expansion to the downside looks very, very, very weak, as you can see. So let it fall. If it's going to fall, let's see how low we go, and then we can get back in with a bit of strength here at a lower level. All right, guys, that's all I got for you right now. If I've offered you any value in this video, do the channel a massive favor. Slap the like button. It does really help out with the algorithm. And of course, if you want to follow me on the socials, the links are in the description below. Feel free to join the Discord, guys. The Discord is where it's at. Lots of good alpha trade setups, fundamentals, and learning material. I'm live 7:30 Eastern every single night talking about crypto news and price action. Take care, guys. Have a good one. And don't forget, buy the dip.